As you're wrapping up your finances for the year, you may want to take advantage of a few investment and tax strategies. Our senior personal finance correspondent, Sharon Epperson, joins us now with smart money moves to make by December 31st that could benefit your portfolio. And you're going to admit some of these things might be designed to save you money.
That's exactly right, Joe. You know, some of the money moves to make now may be driven in part by anticipation of legislation that could result in big tax changes for retirement savers and crypto investors. One of the things to look at is that 2021 may be the last year for backdoor Roth conversions if the Build Back Better Act passes. When you look at what's happening there, a backdoor Roth IRA conversion typically involves making a non-deductible after-tax IRA contribution and then converting those dollars to a Roth account. Now, proposed legislation would end the conversion. Converting traditional IRA or 401k money to a Roth account by December 31st also makes sense, experts say, if you want to pay the tax hit at your current tax rate.
If your tax rate's going to go up in 2022, then it makes sense to do it in 2021, so you pay income taxes at the lower tax rate. It doesn't mean that you have to convert your entire account balance. You can do micro conversions, a little bit this year, a little bit next year.
If proposed tax changes are passed, crypto investors will be hit with the wash sale rule next year. That rule says if you sell an investment at a loss and buy back an asset that is the same or substantially identical within a 30-day period, you are not allowed to take that loss.
It would begin to apply to cryptocurrencies, foreign currencies, as well as commodities. So if anyone has positions in those investments that are currently at a loss, selling them and then buying them back shortly after can help lock in those losses.
At least for now. Now, that loss can be used to offset capital gains, plus up to another $3,000 of other income. And if you're worried about inflation, the third move to make now is consider buying I-bonds. These are inflation-protected and nearly risk-free assets that are paying 7.12% annual rate through next April. You generally can't buy more than $10,000 a year, so you need to make that purchase before December 31st. And then you can buy another $10,000 early next year to still take advantage of the current rate. It's a relatively safe option for your portfolio, although experts say to keep in mind I-bonds are not redeemable for the first year, Joe.
Shepard Smith here. Thanks for watching CNBC on YouTube.